Talking of funds, sovereign wealth funds stole a lot of the spotlight last year with the likes of GIC, Temasek and the Abu Dhabi Investment Authority ploughing billions of dollars into stricken investment banks. Great investment that was. Since then, the world has obviously changed a little bit, but have sovereign wealth funds changed with it? Well, that was the question that I put to Marko Maslakovic from IFSL before we came to air.
It's evident that they have made losses on some of these investments over the past year, especially some of the investments into sort of investment banks. But in percentage terms, this is still a small percentage of their assets, and they are long-term investors. Our estimates are that so far they've invested around $60 billion in investment banks affected by the subprime crisis. And if you compare that to their overall assets under management, which is $3.9 trillion, I mean, you can tell this is just a small proportion of their funds.
But they are very high-profile losses, and do you think that they're likely to make many of the funds much more cautious in the future?
Well, I think so. I think that has been the case already, probably over the past 5 or 6 months. And there is evidence that they are focusing more on their domestic markets, sort of injecting liquidity into their own domestic markets, because these countries themselves are starting to be affected by the subprime crisis and the sort of global economic downturn.
When you look at where these funds are based and where they're likely to be spending a lot of their time in the future, we're talking about some fairly senior staff here that trot around the globe, but obviously are fairly footloose and fancy-free. But it does seem as if London is going to become quite a big centre. Is that just a simple factor of geography?
Well, yes and no. I mean, if you compare London to Tokyo and New York, the top 3 financial centers, New York and Tokyo source a bigger proportion of their business from their domestic markets, whereas London is probably the leading global center for international or cross-border services, financial services. Yep. So London is important as a sort of clearinghouse for transactions of sovereign wealth funds, and as a location from where some of these funds are managed. There are a number of funds which have already established sort of representative offices in London, such as Temasek, the Abu Dhabi Investment Council, the Kuwaiti Investment Authority, and a number of other funds are looking to set up an office in London. And we think this may be the case that we'll see a few more of these funds opening offices in London.
It's very interesting. The 3 names you just highlight, clearly Temasek is the one that isn't exposed to commodities, but the other 2 are. Yep. Commodity prices have fallen, the oil prices obviously come down fairly dramatically. Has this changed thinking as well?
Well, yes. I mean, basically there are 2 sources of funds for sovereign wealth funds. One is commodities and one is non-commodity sources. At the moment, commodity sources account for about 2/3 of overall sovereign wealth fund assets, and non-commodities for about 1/3. But we think non-commodities, that is Asian countries with the foreign exchange reserves, will play a growing role in the next few years. And we think that they will account for more than 1/2 of global sovereign wealth fund assets by 2015. And during this period, we think that global sovereign wealth fund assets will probably double, although it's difficult to say because...
But growing at a slower pace than they have done in the past
yes,
the non-commodity ones will be a greater proportion, but overall, as a group, they will grow more slowly.
Yeah. I think over the past 3 years, the percentage growth has been about 18% per year, and this will probably slow down to about 10-12% over the next few years. Although, again, it's difficult to say because we don't really know what the price of oil is going to be in the future.